Thank you very much. Good morning. I'm really tempted to scrap my speech and answer some of the questions, or try to answer some of the questions just put as a former member of the European Parliament myself and as a former Vice President of the Economic and Monetary Affairs Committee. But I'd rather this morning bid you welcome in our country and have some time to explain what we're going through, our vision for the future, and where we stand as a country. It is a pleasure to have the opportunity to welcome you to this event and to say a few words on the main challenges which the European and Maltese insurance industry are currently facing. We meet at a time when global financial system is, as the IMF puts it, undergoing a number of challenging transitions on the path to greater stability. European economies are emerging from a period of extreme stress, during which they have been severely tested by the sovereign debt crisis and liquidity problems that have called for some very extraordinary measures. The first thing you probably asked yourselves as you entered the room is, where does Malta fit in this picture? You are right. It may be relatively easy to associate what you see around you with your more or less clear idea of Malta's role as a bulwark in earlier times when Europe was in the grip of war and social upheaval. It may not be as easy, however, to imagine to what extent we have to work hard in more peaceful times. When Cyprus secured its international bailout a little more than a year ago, the financial crisis had been picking economies of the Eurozone boundary wall like rubber ducks off a conveyor belt. Greece, Italy, Ireland, Spain, Portugal had already been through it. As David Rubenstein, CEO of the Carlyle Group, put it to Reuters, if you are in a bank that is not all that strong, in a country that is not all that strong, you might not keep your money there any longer. That's the real impact of Cyprus. It's scaring to death a lot of depositors around the world. This is exactly what the world was asking just a year ago. After Cyprus, where next? Malta seemed to be the last standing economy on Europe's southern front, a small country in the middle of the Mediterranean, an island economy, and the financial center. This could be an easy target. As it turned out, all eyes fell on us. The Eurozone could not afford another collapse. It is indeed uncanny how, in the midst of all the turbulence savaging Europe's peripheral economies, Malta was being called on to live to its reputation as a bastion of stability, holding Europe's southern gates. Under intense media scrutiny in what were the first weeks of my new administration, and surrounded by a climate of low investor confidence, our country needed much more than a strong economy to withstand the international flak. Yes, Malta's economy was and is stable, very diversified, and well positioned to absorb a multitude of risks. It was and is in good shape and continues to do well, holding a firm course while other economies flounder. Important as it was, though, a strong economy was no guarantee that international confidence would not waver at a time when much bigger economies were being overwhelmed. Malta wasn't one of them. Malta stands tall. That Malta was able to hold out at the height of the financial crisis was, in my view, also down to other important factors that came into play, not least our age-old experience as an international commercial hub, our strong banking and investment culture, and our young but savvy international financial services community. One reason why the contagion that was spreading across the Eurozone seemed to freeze at Malta's doorstep was because our economy has always been a very open one, depending to a very large extent on international trade, and well exposed to international risk, largely dependent on the Mediterranean barter trade for economic survival in very early times, and reliant on our maritime trade ever since. One can say that Malta had been preparing for the globalized economy for as long as we can remember. Never isolated, despite being an island state, Malta has played an intrinsic role in the expanding web of international commerce since the early Phoenician merchant seafarers first set foot on our shores 3,000 years ago. The Maltese traded goods in the days of the Roman Empire, exported cotton in medieval times, and delivered high-value products such as Maltese lace to the stirring high streets of Europe and the United States in the wake of World War I. And, if you allow me to zoom a bit more, I should also mention that in the mid of the 19th century, owners of Malta-registered vessels carrying grain from Crimea to Northern Europe used to underwrite their insurance here in Malta. Thus, despite the pain it has had to go through in times of economic change, the Maltese economy has always managed to adapt comfortably in the longer term and has always emerged well prepared for the next change in global economic patterns. This brings me to my next point. The profile of Malta's banking sector and Maltese capital have played a huge role in shielding the country from speculation that ran rife in the marketplace. The consequences for Malta would have been disastrous had it not been for the strength and resilience of our banks, and for the fact that Malta's sovereign debt is totally funded by Maltese savings. Due to our traditional funding models, strong capital and solvency ratios, and our prudent lending practices, Malta has been consistently ranked by the World Economic Forum among the top 15 countries worldwide for the soundness of our banking system. The local capital market, also remarkably well regulated by WEF standards, stood up to the test in similar fashion, reflecting sustained confidence in the Maltese government debt. These were the first signals that analysts picked up as the spotlights turned on us, signals that grew stronger as the rumor mill wore on, and then the tide started to turn. The deeper the scrutiny, the more positive were the results, until finally, the credit rating agencies, the financial media, and the global financial regulators were convinced that there truly was no cause of concern. But it was not only public sentiment that showed ongoing trust in our economy when the going got tough. Over the years, and particularly during the last decade or so, the growth of our financial services sector has attracted a large number of foreign investors and operators to our shores. As a result, financial services and insurance activities have become important contributors to the Maltese economy, driven by a multinational and multilingual workforce that has enabled us to compete in global markets. This is an economy that has expanded by a third within 10 years of EU membership, with financial services sector that has doubled in size over the same period. The wheel is turning for Europe, and things seem that they are looking up. Economies across the continent appear to have stabilized and are even showing some positive signs of growth. The conditions for a sustained recovery in the medium term are, by and large, also improving. With the European Commission forecasting a robust growth for our country over the next 3 years, Maltese insurance is in a strong starting position. The sector is a key asset for Malta, employing close to 1,000 insurance professionals and support staff, which for a country such as ours is considerable. While business volumes are steadily on the increase, the transformation that has taken place in this industry is indeed impressive. Maltese firms, who in the past used to provide insurance to the local market as agents of foreign insurance companies, have consolidated through a number of mergers that have started providing insurance underwriting services themselves. These companies are now successfully established in the market and provide an invaluable service to the wider economy. Meanwhile, they have been joined by some 15 new companies writing cross-border business as conventional or captive insurers and reinsurers, one of the clearest signs of a single market integration in financial services. The sector now has a total asset base of over 10 billion euros and an annual premium income close to 2.5 billion. It continues to expand through an increasing number of protected cells as much as by the addition of new companies. Access to the single market has also allowed Maltese insurance brokers to diversify their business, some of them by entering into insurance management business through joint ventures with established international managers. The number of insurance management companies has now reached 15, with all the global players in the field having an established presence in our country. A growing number of law firms, accountancy firms, and other professional service providers have also specialized in insurance, adding more value to our product and supporting the ongoing drive for innovation. Not only has the insurance industry been able to face up to the increased competitive pressures in the home market, it has also become an integral part of the country's drive to continue making headway internationally. This government recognizes all this, and we are determined to maintain and strengthen the sector by promoting new synergies, legislation, and training initiatives that will continue to sharpen our competitive edge. Conscious of challenges still faced by the European insurance industry, not least by the negative effects that the low growth environment is having in the demand for both life and non-life products, this government pledges to do its best to ensure that Malta will continue to offer the most competitive business environment possible for financial services and insurance companies in Europe. The tax treaty network, which now comprises around 70 agreements, will continue to be expanded while international financial corporations, international finance executives, and high net worth individuals alike will continue to be encouraged through the right policies to base their interests here in Malta. More importantly, in the current environment, we will continue to pursue tax policies that promote economic activities and an international level playing field. This is why we will continue to take a stand against the implementation of any form of financial transaction tax that may detract from the competitiveness of doing financial services business in Europe. Innovation will also continue to be a key policy platform going forward. Malta remains the only EU member state with cell company legislation and continues to be a leader in the application of Solvency II to these types of structures. And just as they have done with the introduction of new frameworks for redomiciliation, insurance management, occupational and personal pensions, and reinsurance special purpose vehicles, our legislators shall remain on constant lookout for further opportunities that would add to the versatility of our regulatory infrastructures. In this respect, this government shall maintain a close relationship with all stakeholders and with our regulator, the Malta Financial Services Authority, which has played a central role in this development effort, will continue to promote innovation while standing vigilant against any practice that might compromise the financial stability of our operators or the interests of consumers. Ladies and gentlemen, The insurance industry is a mainstay of our financial services sector. It is a highly valued investor in our economy and an important provider of jobs. We are conscious of the challenges that the European insurance industry faces, ranging from a sluggish economy to the impact of low interest rates on profitability, from the lingering market uncertainties affecting long-term asset portfolios to increasing competition from other financial products, from demographic patterns to climate change. Malta strongly believes that these challenges can only be overcome through sound competitive policies that promote strong and sustainable growth. We will therefore actively promote and support the adoption of such policies within the EU. Our pledge to the insurance community in Europe is to continue to provide a stable and competitive environment within which it can continue to expand and develop new opportunities within the framework regulation provided by EU legislation. I assure you that under my watch, Malta will continue to be a model of regulation, integration, and opportunity, and that it will continue to attract international capital, companies, and leading professionals in your field. We are determined to keep the momentum going for the years to come. Thank you for your attention and enjoy the conference.